Bloomberg Audio Studios.
Podcasts, radio, news.
Vivid Seats CEO Stan Chia. Stan, why do you think that your forecast is lighter than what investors are expecting? Is this kind of a reflection here of this booming rebound of people going back into the entertainment world?
Hi, Sonali. Thanks for having me. Look, I think when we look at, our performance that we delivered last year, I think really strong year for the company and certainly reported in our results, right? For the full year, 23% growth on the top line, 25% growth on an EBITDA basis, landing at $142 million. And look, I think what we told everybody is we continue to be really excited about the space. And perhaps more importantly, really excited about the opportunity to extend the platform, the benefits that we're seeing into the international markets, and therefore an incremental investment into the international markets to take advantage of that opportunity. And I'd point out is still yielding us significant double-digit growth on the top and bottom, with even the reflected investments being a 16% year-over-year EBITDA growth to put us at $165 million of adjusted EBITDA at the midpoint.
Now, how do you see things moving forward? Is this more competition that you're facing when it comes to events, or is this a consumer that's slowing down?
Yeah, I think what we've continued to see is really strong secular tailwinds in the category where consumers continue to prioritize their spend on experiential events. And, certainly when we look at our platform, our investments in the space, we see great behavior from consumers. We see stickiness within our product. We are one of the only ones out there with an industry-leading loyalty program. And as we reported on today, since we've launched that program, we've mixed 1,300 basis points into repeat orders, where our repeat orders are almost at 60% now. And I'd remind, I think everyone, look, our repeat orders stick to the platform and they're significantly more profitable, which then allows us to go out and invest in new capabilities and the opportunity to tap new markets as well.
Well, what are those new markets for you in particular? You think we're after the Super Bowl now. What are the sporting events that you would be going after that could yield the most results for you? Do you expect big money into other areas?
I think we're excited about the entirety of the space. Certainly, sports, and, last year we made 2 acquisitions, the most recent of which was Vegas.com, the leading authority in Las Vegas. And we see a lot of tailwinds in particular in that market with the Super Bowl, as you mentioned, just having been in Las Vegas. F1 had its inaugural year last year, first of a 10-year deal there. And the Sphere, which is there, also driving wonderful acts. So I think across the spectrum, sports, concert, theater, we continue to be really excited about that trend here in North America, and increasingly so as we see those experiential and consumer preferences scale globally as well.
Now, you're a company that went public via SPAC a number of years ago. How do you think that your life in public markets is going to play out? Your stock did hit a record low today. You've had some significant backers in the private equity world. How do you expect your ownership to change over the next couple of years?
Yeah, look, I really focus on the results and the execution that the company has continued to deliver, right? I think we've got a wonderful team. We've got, great long-term investors in the stock that continue, I think, to yield the performance that we've seen, right? I'll go back to, I think as a public company that came out in October of 21, we've certainly beat our guidance and the street every single quarter. When you look at this most recent quarter, again, as we've talked about, beating consensus on the top and bottom in double digits, right? And, against a scaled marketplace, right? We came out, if you remember 2019, I think when you look at our disclosures, we were closer to $2 billion in GOV, closer to $100 million in EBITDA. And our guidance for 2024, at the midpoint, $4.35 billion in GOV with $165 million in adjusted EBITDA and great cash flow coming out of that, right? So I go back to when you look at the execution of the business, the core performance and the financial results we're delivering, I think we're really excited about that. I think certainly there are elements on the share price. Look, who doesn't wish their share price was higher? We certainly think we're undervalued. And I think we put, proof to the pudding here today, where the board and I announced, the authorization that we're going to go out with a $100 million share repurchase authorization as well. Because certainly we see a strong dispersion and distraction between the share price and the company performance.
Stan, we thank you for your time. We have to leave that there. That is Vivid Seats CEO Stan Chia.